Hello everyone, listen, this is CJ Wallace. Thank you so much for tuning in. Boy, do we have a power-packed show for you today, because we have one of the most extensive scenarios that I want to go over, and you notice that there is a blank board here, right? Well, that's because I want to go over the velocity banking method from start to finish so that you can see how the sausage is made, how the building is built, how the science, right? The true science is implemented within the velocity banking method, and that, guess what? You can do it too, all right? So rewind this as much as you need to, because we're going to be getting into some scenarios that are going to seem complex, right? And it's going to be all over the place, but watch as I organize it and then wrap it up and then present it to you in a way that everyone can understand, all right? Watch this. Let's say you make roughly $3,400 to $3,500 a month. Now, first of all, with income, anytime you have a range, what do we want to do? What do we want to do? We want to make sure we take the lowest amount. Why? Because things happen. You're thinking that you're going to make $3,500 when guess what? You only made $3,400. All right? So we want to make sure that we build in an oops factor and have that conservative amount. So let's always take for the income. Anytime there's a range, you're not going to go for the high range. You're going to go for the 3,400. All right? So 3,400 is the income, abbreviated by I. All right? Now, what else do we have? We got to have the expenses. All right? The expenses, they total $2,184.36. Let's write that down right now. 184, and 36 cents. Let's abbreviate that with an E. All right. So right away, how do you calculate the cash flow? That's right. Income minus the expenses, and that's going to be the cash flow. All right, so we don't know that yet, so let's go ahead and take that pause there and continue on. All right, so they're saying I just paid off this morning the major credit card. All right, look, let's say you have a credit card, all right, for $1,500. That's the credit limit, okay? So you got your credit card up here for $1,500, all right? Do you have another credit card? Yes, you do. You do have another credit card, which limit is $4,800. Let's go ahead and put the balance over here, all right? Now the balance on that second credit card, okay, is going to be $4,766.15. This is for Amy, for anonymity, all right? Now the one that is the $1,500 that has zero balance on it, and the cash flow index, if you need help with that, don't hesitate to let me know in the email. This person does not need help with that at all. The monthly index. All right, the question is, where do I start? So let's say you have a goal to pay off the car loan, okay, in 2.5 years. Car loan elimination. All right, eliminated. Now this person just said a keyword. Can you know what the keyword is? Do you know what that keyword is? I have set a goal. You see, the goal is going to determine where you should start. Because a lot of people, they are concerned with their credit score, right? A lot of people are not concerned with their credit score. Maybe they want to pay off their house first instead of their car. Can they do that? Yes. Regardless of what the cash flow index says, it's your goal. And it starts with what you want. Man, you got to say that out loud. That's empowering. Okay? It's my goal. And it starts with what I want. If I want to pay off a dog, if I want to pay off you know what I'm saying, a garden or a farm instead of my truck, I can do that, can't I? All right? Absolutely. So, we're going to continue on. If her goal is to pay off her car in 2.5 years, okay, and they want to be able to pay all the bills using the credit cards, very good job, all right? They don't have a line of credit, okay, as far as a checking line of credit, not yet. Congratulations on that. I want to know if they need to give it a few months if that is the case. And what they do is they break it down, their different expenses, okay, and what they have. So what we want to do is we want to definitely direct these people to make sure, all right, make sure you get with me. Make sure you are a Velocity Evangelist member so that we can break down in minute detail and also give you classes each week on how to implement the Velocity Banking method in your neck of the woods. What we're going to release to you right now is going to be so powerful. And no, you do not need a checking line of credit. And no, you don't even need a Visa credit card. And no, you don't even need a line of credit to implement the Velocity Banking method. Why? Because it's all about the timing and the principal. When are you paying that principal off? When are you taking that huge chunk out of the principal? Janet Jackson had a song and it was entitled The Pleasure Principle. But what I want you to realize in this video and in the Velocity Banking method is that there's such a thing as the chunking principle. Oh, oh, oh. All right? You got to remember the chunking principle. Now, regardless of what the principle is on that car, all right, I want you to remember something. Let's say the principle is $30,000. And so let's go ahead and put the $30,000 right here. $30,000. Okay, you're bringing in $3,400. All right. What we want to do is we want to make sure that we are taking advantage of our cash flow, which we don't know yet, and we're taking advantage of all of our lines of credit over here, okay? Look at this fat one right here, huh? We're going to make sure that we know how to divvy that up, and we're going to make sure of it right now. Watch this. All right, so as you can see, we went ahead and calculated that cash flow for you, which is $1,000. Okay, so watch this. It's called cash flow, not cash flow index, right? That's going to be another element, and we'll go ahead and get into that as well. All right, so we got all of the elements here that we need. Oh yes, and when we have that, that's going to empower us to let us know what we need to do from this point forward. So, do you see this balance right here? We love this because now we know that we can use this credit card. This is going to be our main Velocity Banking credit card here. The ideal is to have a high credit balance, the higher credit limit card, which this person has right here, it's perfect, okay? And to make sure that they have a substantial balance on that, just like that, okay? That's perfect, okay? Now, in reality, to be even more of a success, they need to have at least 3 credit cards, all right? 3 to 5 credit cards is the recommendation. That way they have all those lines of credit and all those options available to them to use at their whim whenever they want to. So $4,766.15, what are we going to do? We're going to, instead of using our checking account and paying those bills from the checking account, okay, you're segregating. Come on now. You got to end segregation. You got to end cost segregation, please. Because when you do that, it's going to be less money for you and more money for them, for the other side, whoever you're paying, okay? The loan officer, the lender. What you want to do is you want to use your credit card as your new checking account. And then from there, then you're going to pay the car payment. Then you're going to pay for the groceries. After that, you will pay for all of the other expenses that you need to from your credit card. Does that make sense? Absolutely. So whether your credit card is $655, your car payment is $655 a month, okay, or it's more, it doesn't matter, because you'll be paying that from your credit card and you'll have this left over. This left over, okay, the cash flow, $1,215.64, that you can divide it by this, okay, $4,766.15 divided by 12/15/64, okay, this number here is going to give you how many months you can expect to pay that off. 3.9, okay, so about 4 months you're going to pay this off. And then what are you going to do once you fill that back up? What are you going to do? Now, another thing to remember is that anytime you have insurance, warranties, anything that can be paid annually and you get a discount, you would fare better if you just go ahead and pay annually, get that discount, then pay it back off with your income, remember, because it's going to be income. Okay, what is it going to do? It's going to direct deposit right into your checking account, okay, checking account. And then from the checking account, you're going to make that transfer, not payment, but the bank is going to think it's payment, okay? You're going to make that transfer from the checking account into, that's right, Amy, right into the balance. And you're going to be paying it off in 3.9 months. Doesn't that sound like a game changer? All right. So after the 3.9 months is done, okay, you got it back up at 4,800. Won't you just go ahead and place this $4,766.15, right, that you racked up on this? Go ahead and place that into, let's just round it off, okay? Let's just say you want to do the full 4,800, okay? Place it towards the principal. Place it towards the principal instead, all right? Look at what you have here when you do that, because at the same time, this is your car payment. At the same time, you're going to be, what? Paying it monthly, paying it monthly, paying it monthly. And you may ask, hey, wait a minute, isn't that 2 debts? No, because credit cards are not debts. Remember, that's your new checking account. That's what your income is going into. May I ask you a question? What's your minimum payment when you're paying your income into your credit card? 0. Marker drop, all right? Marker drop. So from then on, you're just seeing green, all right? So look, this right here, is going to be, what, 25 too? All right? You guys got a calculator? Go ahead and calculate that up for me. All right? Let me 25 too? $25,200, but remember, each month you're paying $700. Doop, 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 doop. And you're filling that back up to $4,800, and when you're full, you have to empty yourself again, right? $4,800 again. And it's going to make sure that you pay that down as much as possible, all right? It's going to be an absolute game changer for you because you're going to be allowed to knock that payment off in no time flat, and you don't even have to scrimp, save, be frugal, eat beans and rice, mess up your digestive system. Okay, you can be healthy and you can be stress-free, all while making sure that your money works for you instead of against you. Okay, because if you keep your money in the checking and the savings accounts and you don't move it out of there, remember what inflation is doing. It's robbing you. It's robbing you. All right? Boy, we can talk forever on that. All right? It's not really inflation that's robbing you. It's the people behind it. But look, make sure you're doing this. Okay? Make sure you're using your credit card. Make sure that you're using Plastique, because I know what you're thinking. CJ, you can't pay blah, blah, blah with the credit card. That's why you need Plastique. That's why you need to look at the description below here, right? And look for the sign, right? Look through those links. That's why we have them there, all right? This is beautiful. Can you pay the car off in 2.5 years? Yes, you can. And Amy, I want to show you step by step, not just a general overview, step by step on how you can do that, all right? Get with me, sign up, all right, to Velocity Evangelist, become that member so you can get this information, not only information, but step-by-step planning and customization of your Velocity banking, all right? Because remember, we have the Money Max account for you as well. So you can just, and it'll calculate, it'll let you know which credit card to use for the fastest payoff of a mortgage, of a car, truck, whatever it is, a boat. Just let us know, all right? Thank you so much, you all, for watching. This has been fun. It's always been fun with you. God bless, and you have a great night. Listen, don't just know Velocity Banking, live it. God bless.